Hello guys, this is Michael. This is the first video. I'm going to talk about Bitcoin and cryptocurrencies and blockchain in general. I'm going to choose to use the English language. This is because it's easier for me, and I also think it's easier for everyone else. Have you guys ever tried using Kiswahili? Pure Swahili? Man, that language is difficult. So I'm going to stick to English. Well, I'll try my best to explain what Bitcoin is, what cryptocurrencies are, what blockchain as a technology is, and why it's important. I don't think I'm going to cover everything in this first video, so I'm going to hopefully make subsequent videos explaining the above. That may be on request, depending on what the viewers in their comments are going to request. So yes, so we begin. But before we do that, I want to get some things out of the way. First, any information that I'm going to give in this video is my personal opinion. Don't take this as financial advice. So, anything that you do, whether you decide to buy or not, please let that be your personal decision. Now that we have that out of the way, I think we can begin. So, it's important to understand some context about what Bitcoin is and why it was created in the first place. So I'm going to be using some examples and scenarios of why the person or people who created Bitcoin did so. So I'm going to take you back, say 10 years ago. So in the year 2011, for example, this is going to be in a Kenyan context. If you went into a shop to buy a piece of loaf, not a piece, but a loaf of bread, at that time, I want to believe a loaf of bread was retailing at approximately 22-25 shillings. Right now, 10 years later, a loaf of bread is currently retailing at 50 shillings. That's double. That's double. And that is essentially the same story across almost all commodities and services. And it's not localized to Kenya. It's actually across the world. So it's a common story everywhere. That is very important in understanding the context I'm about to bring about. And this is, what is money? So money could be a lot of things to different people. Money has evolved over the centuries. At some point it was barter trade, so whereby people used to exchange commodities. I bring my goat, you bring your bag of beans, we exchange. That did not work for many people because it's a little bit difficult to rather peg value in terms of those commodities. An example would be you came with your beans, but I didn't want beans. Say I wanted a shoe. So are you going to help me? Now you see, I have to look for someone with a shoe, or I take your beans and then go look for someone who wants beans so that I can exchange back to shoes. That did not work very well. So they had to figure out something else. At some point, precious metals came into the picture. That could be gold, could be bronze, could be other items. Later on, human beings figure out about money in terms of cash. So, what is cash? So, a good understanding would be this. Cash is a medium of exchange in which we all agree that it has value. What gives it value is because the government says it has value. That's a basic understanding of cash. If you look at it in terms of value, it's only a piece of paper written a value on it. So technically it does not have any values. It could be a piece of paper like just like any other piece of paper. However, since it's backed by the government, so the government is a security, or it's the entity that gives that piece of paper value, so that when I work, get paid in cash, we can use that medium to give someone else. I hope you kind of understand what I'm bringing about here in terms of cash. So that's where currently we are at. However, there's some flaws. Going back to the example that I gave about a loaf of bread, you would want to wonder what changed from 2011 to 2021, a span of 10 years. Why should a loaf of bread cost twice as much? It's still made from the same wheat, still made from the same sugar. So there's no new ingredient, there's no new kind of technology. So what makes it to be twice as expensive over a period of year? Now, that's why I want to introduce something called inflation. So in this sense, arguably most people will want to believe that inflation is brought about because cash is controlled by a central entity that decides to dilute the value of the money, either through printing more cash, taking loans, and other stuff like that. So now that would mean if you used to work let me give a different example. If you had 1,000 shillings that you had worked for in 2011, 10 years later, that same 1,000 shillings, you have to double for you to get similar services or a similar product. That would mean you're actually losing the purchasing power of your money. So how does that help? Say, for example, if you are working and saving money for your future, you realize your future, assuming you wanted to save for your retirement that would come probably 30, 40 years later, that would mean you're going to lose in multiples of 10 the purchasing power of your money. So somebody sat down and figured out what's going to happen, what would happen if we tried to create a perfect money, in quotes. Perfect in the sense that this money is not controlled by anyone. Its value is not pegged on trust by an entity like a government or a bank or anything. It's only going to be purely market driven by the laws of demand and supply. So a guy or a group of guys called Satoshi Nakamoto, they are anonymous, so we don't know exactly who they are, came up with that idea, and all these. So it was going to be difficult to implement that, because this is something that no one controls. It's controlled purely by computing and purely by market demand and supply. So I'm not going to delve deep into the technological aspect of it. It's a little bit complicated or complex. However, I can still do a subsequent video trying to explain the basics, including the technological aspect of Bitcoin and what makes it to be so robust. So the Satoshi Nakamoto anonymous person or people wrote a white paper explaining this type of technology and what it was going to be all about. So now they were going to call it Bitcoin. So now I'm going to try to explain Bitcoin in three aspects, and those three aspects are in relation to its current value. And when I say value, I don't mean the monetary value, I mean the value from the perspective that people look at it. So those three aspects are going to be in this order. So there'll be the first one, which is the currency, and this is also what the person who created it was creating a currency. That's very important. So that's the first and the primary goal of Bitcoin. It's a currency. So the second one I'm going to talk about is Bitcoin as a commodity, where a commodity is something that people are trading. It could be daily, could be weekly, could be monthly, and all that. Could be futures. So this is a commodity that people are trading to make a profit. And third, I'm going to talk about Bitcoin as an asset. Bitcoin as an asset. So those are three. So now we begin from the beginning, the first one. So the person who created it was creating a currency. So a currency would, he wanted to create a peer-to-peer type of exchange currency. So that would mean from person A, say Mary, wanted to send money to John. Mary is in Kenya. John is in, let's say, Yemen. So they don't need to have a central, say a bank. Naturally, for example, if you wanted to send money across the seas, you have to use a bank, use maybe Swift, use MoneyGram or something. Now you realize now there will be a third party, sometimes even a fourth party for that kind of transaction to go through. Now with Bitcoin, the currency, you would not need any third parties. So it's just Mary sending to John through the network. That's it. You don't need anybody to trust. You don't need any third party to carry out that transaction. All this is going to occur in the network. So there will be several aspects in that. It's usually it's a complex thing trying to understand the entire thing, because there are several things. There's what we call the blockchain. There's what we call the hash. There's what we call the miners and all that. I'll still come back to that. So what happens is this: Bitcoin as a currency, or Bitcoin just generally, is run on a blockchain. A blockchain, I'm going to try to explain it in simple terms. I'm going to compare it with what most people will understand. Since we don't have anyone, a third party, who can do confirmation of this transaction, in this case a bank or an institution, so Bitcoin is recorded in a ledger. A ledger would be a good example. Is just like you can say, you can take a book, right? Mary sent John 10 shillings on this date at this time. That's it. You record that transaction. So now in this case, since we don't have that, we have a ledger, but this is a digital ledger. So in this digital ledger, all the transactions are recorded there and they are public. And a transaction is based on the previous transaction, and that transaction is based on a previous transaction going all the way back to the first transaction, which was created by Satoshi Nakamoto when he launched the Bitcoin network. So all other transactions are piled from the first one, and they have a relationship in the sense that the information from the current transaction is piled on the previous one. So you can't have this current transaction without the previous one. And that dates all the way back to the first transaction. So what that would mean is we can trace all the transactions, all the money, or basically all the Bitcoin from from the first Bitcoin to the second to the third. So that would mean we can essentially know who sent who, what money, which date, and all that kind of information. And that also prevents what is called double spending. So with that kind of technology, you can't send two people, since we don't have a central person or institution that's controlling all this. You can't send this transaction to the same money to different people, since it's recorded. If you send this transaction to person B, that money is deducted from your account, credited to his account, and it's recorded in what is called a block. And this block is piled on the previous block, and so on and so forth. And now that creates what we call a chain, a blockchain. Essentially, it's just, in simple terms, it's piling of the transactions as they keep coming in on top of the other, but dating all the way back to the first transaction. So that creates a chain. And now that chain can be confirmed by anyone. However, there are people that are called miners. So these miners are the people who will be confirming these transactions and creating the blocks. They get rewarded in something, they get rewarded in Bitcoin each time they confirm a block. So essentially, a block will be a certain number of transactions piled together in one block, and they are signed actually, and then they will be piled to the previous block, right? So now they are paid in Bitcoin. Those are the miners. Their business is to confirm the transactions and to secure the network. In simple terms, that's it. So now I want to explain the second part. But before I do that, you want to understand that Bitcoin was created as a currency that is not controlled by anyone. It's not controlled, it does not depend on any third parties. Does not depend on trust. It only depends from person A to person B. Simple. It's a secure network. It's what we call a decentralized network. So essentially, nobody controls it. When you get your Bitcoin, it's yours. You keep it in your own wallet. You control that wallet. Nobody can confiscate it. The government cannot access it. The only person who can access it is the person who has the key to that wallet, and that person is you. So that was the first and the major reason why Bitcoin was created. Okay, so now the second aspect. Now the second part would be Bitcoin, the commodity. People later on figured out that since the price of Bitcoin is not fixed, it will never be fixed, most likely, you never know, it will always fluctuate. So anything that's fluctuating vigorously in price may mean people may actually take advantage of it. They will take advantage in this sense. For example, if you buy a cup, but the price of that cup is never fixed. It's a free market. I buy a cup today, say 20 shillings. I can come tomorrow and find the same cup is selling at 40 shillings. What would I do? I may buy 3 and hope that when I come tomorrow, the price will have doubled. I sell all my cups, take my profit. Or since the price is never fixed, you may buy today 20 bob, and you find tomorrow it's retailing at 8 shillings. You've already lost 12 shillings. So now this commodity aspect of Bitcoin is better off left for people who actually understand trading, because you can easily lose all your money. So I would rather people that fully understand what Bitcoin is, what cryptocurrencies are, and who understand the risk of trading Bitcoin or any other risky fluctuating currencies, to people who know what they're actually doing. Personally, I don't trade any cryptocurrency, so but that's personal. If you want to do it, I can only wish you the best, because most of the time you never know when that price will go up, when it go down. However, I have to say this, over time, from the charts, and over time I mean prolonged period of time, Bitcoin tends to go up, always up. But over a short period of time, probably weeks, days, months, it could go any direction. Your money could go up 20% in a day. It could go down 90% in a day. So that's not guaranteed. So in terms of that, people just figured out, since this thing goes up and down, if we could figure out, it's more of gambling. If you can figure out, you are good at predicting, then well and good, you make lots of money with it. But I would discourage that from people who don't actually understand who don't actually fully understand that this thing is wild. It can go anywhere over short periods of time. Now, the third aspect of it is where I talked about Bitcoin being an asset. Now, what I mean by being an asset, assets, these are things that will grow in value over a prolonged period of time. And people figure out this in Bitcoin probably a few years after it was created. So initially everyone was using it as a currency because it's easy to move large sums of money to weird hours. It's fast, it's cheap, and all that. You can send say 1 million shillings across the border in a few minutes for probably a few hundred shillings. I'm not sure you do that with a bank. If you factor in all the bureaucracy, you may need to take several days probably, and deal some legal aspects as well. But now with Bitcoin, it's easy, fast, cheap, and all that. So now the Bitcoin being an asset aspect of it is, it's capped. Bitcoin is capped at 21 million coins. That means there will only ever be, at any given, the maximum supply of Bitcoin would only be 21 million Bitcoin. Currently it's at it's close to 19 million, so we still have 2 million more Bitcoins to be put in circulation, and they'll only be put in circulation through mining, as I described earlier. And mining is the network just keeps paying the people who are securing the network and confirming the transactions and piling them into blocks. Each time you create a block, they are paid in Bitcoin. But also that supply keeps, it's actually designed into the software so that it keeps reducing over time. But as more and more people join the network, so the supply also keeps going down. So that means as the supply goes down, the supply of Bitcoin, the demand is going up because more people are joining the network, and it's capped. So the only thing that we can do here is the price will just go up. Essentially, it's like, say, a piece of, I'm going to give an analogy that is usually given by one of the best describers of Bitcoin, and that's Michael Saylor. He says buying Bitcoin is like owning a piece of prime land in a city, say Nairobi. That piece of land will always have demand as long as people will want to live in Nairobi. So since the land is not expanding, people are expanding, the population is growing, the economy is growing, but the piece of land is never going to grow. So what happens? So that piece of land that's available goes up in price. It will always go up. That's the only direction that it can go. It can't be flat, it can't go down, because the demand keeps increasing, the supply is constant. Yeah, so as an asset, over time, not over a short period of time, over time, that's why in my Facebook post I said give it at least 10 years for you to get substantial amount of profit. However, it can still get, if you invest lots of money, then you may get lots of money in a shorter period of time. However, for small investors, maybe 10, maybe more. Either way, it's like buying a piece of land, so you don't have to worry about the fluctuations in between the road, because the biggest issue with Bitcoin is that most people don't actually understand what it is. That's why I've had a long video about it. So as an asset, the reason being the supply is capped, and this thing is not controlled by anyone. It's only controlled by whoever owns it. So if you own a piece of it, that is yours. Nobody can take it from you as long as you keep your keys safe, the keys to your wallet, the wallet that contains your Bitcoin. If 1 billion people want to buy it, they'll buy it, and each of those billion people will always have their own coins and their Bitcoins in their own maybe mobile phone or their computer. I don't know if that's the best description I could give about it being an asset, but essentially it's this. Its supply is fixed, the demand keeps growing over time as more and more people actually understand what Bitcoin is, and nobody can confiscate it. To make even it much better in terms of an asset is because you can always convert it back into cash in a snap of a finger, very fast. I'm not sure you would do that with a piece of land. I'm not sure you would do that with a car or a house. Excuse me, but with Bitcoin, you do it in just an instant. So if you're having it as an asset, you can convert it back to cash in minutes. The other thing about it is that you can, the fact that Bitcoin can be split into what we call Satoshis. So Satoshis, I think it's approximately, I think it's a millionth of a Bitcoin. So one Bitcoin is divided into approximately, I think, a million. I'm not sure, but I can confirm that and update it in the later video. But approximately 1,000, a million Satoshis. So a million Satoshis, essentially one Bitcoin, you divide it by a million, and you get the smallest part of a Bitcoin. You can buy that and have it. So you can also be, you don't have to buy a whole Bitcoin at the same time. You can buy in small bits and pile it up. Yeah, so essentially that's it. I'm going to brief it up again or summarize. Bitcoin is a currency. It was created as a currency, peer-to-peer or person-to-person, without the need of a third party or a trusted party to confirm those transactions, and it's irreversible. So essentially, if I send you money through Bitcoin, I can't reverse. And there's no intermediary to do that. So if each time you send because you want to send, and that's it. If it goes, it's gone. The only way you can get it back is through you conversating with the person that you send it to, and they choose to send it back. There is no other way. It's not controlled by anyone. It's computing, pure. It's just pure computing. You can't talk to a computer, of course. So it's a program that's run on a computing network, and that computing network is decentralized, meaning it's spread out. It's not in one place. So controlled by anyone. Anyone can join. Anyone can confirm all those transactions. However, I also have to state that those transactions, the identities is not they're not written in names. It's a hash, what we call a hash. So you only see some code, maybe numbers and letters. That's it. It's like, say, if you all our M-Pesa transactions were just recorded in the M-Pesa code that you get. No names, no numbers, no nothing that can identify who sent, who received, just that transaction hashes. Yeah, so now when you understand that, now you're able to figure out that, well, this is money that's not controlled by anyone, or this is an asset that's not controlled by anyone. It's controlled by basically demand and supply and a computing network that no one can shut. Essentially, you can't shut all the computers in the world at the same time. You only need one computer to be running at any given time. The Bitcoin network has always been up. I think since 2014, it's never had any downtime. It's always been up, up. So now, my own perspective is this. Remember the analogy about the bread? As long as, because the government will always print money, I can almost bet that 10 years from now, a loaf of bread will no longer be 50. Probably it will be 80, 90, most likely it will be 100 shillings. So that would mean double. If you own some piece of Bitcoin or an asset like land, 10 years from now, we can all bet that that piece of land will not be the same value it is today. Bitcoin has grown all the way from 2009 up until now. It's grown, I think, thousands of times, because at one point it was approximately 1 shilling. So being 1 shilling, and right now it's retailing at almost 7 million shillings. You can do the sum. That's about 7 million times, right? It's unlikely it will go at the same rate since its market cap right now is so big, but you can always bet that it will keep growing. The more people join the network, the more people understand actually what it is, then the more people will be buying in, and more people will be buying it as an asset. So if you're buying it as an asset, you're reducing the supply that's tradable. So the supply that's available will only be going up. However, on shorter periods of time, it will always fluctuate. It has always fluctuated. It will always fluctuate on shorter periods of time. But you stretch it up, you zoom it out. Zoom the charts out, you'll always notice that curve is very nice and gradually going up. It will always go up. Now, so don't let anyone tell you before you even buy in, the best thing is to understand. I usually say, if you don't understand what it is, don't bother. Don't bother. Okay? Don't bother. First, fully understand what it is. When you understand what it is, then you realize, what? This is a chance of a lifetime. So you join, but you join when you're fully aware of what it is, what it could be, and it's endless. as much as we can't predict, it could as well go to zero. What's the chance of it going to zero? Uh, that chance is close to zero as well. It's a very unlikely to go down. It's more likely to go up, and it will always go up. Okay. Let me know if you've understood at least most of the part that I was trying to explain. Uh, and any queries you have, maybe I can do a subsequent video about the same. Yeah, so I can see it's approximately 35 minutes. I didn't expect it to be that long. Yeah, but you have to take lots of time for you to fully understand. When you understand, you realize it's a revolution of money. It's a revolution of money. It's actually unbelievable. When you fully understand Bitcoin, you understand it's unbelievable. So the other thing I would say is Bitcoin was a kind of the first generation. Some other forms of blockchain technologies came about, what we call smart contract blockchains. A good example would be Ethereum, and that's it's a whole different world as much as it's based on the same, but the possibilities, it's actually incredible. It's incredible. So let me know if you have any queries. Uh, Let me know what you didn't understand. I can clarify that, and also let me know if you want me to do subsequent videos explaining maybe how you can buy Bitcoin, how to keep it safe, also explaining the smart chain contracts, blockchain like Ethereum, Binance Smart Chain, Cardano, and all the others. It's a world. It's a complete world. There's a lot. There's a lot. Yeah. So you can leave a comment down below. Uh, Also, you can give a like so that other people can also have the same. As I had said earlier, it's my first video, so let me hope some people have understood. I've helped someone understand what it is. Yeah, and let's see where this gets us. Yeah, thank you very much.